This video is on Tesla. You've got obviously what appears to be a hockey stick. It's going straight up in the air. And congratulations to Elon Musk and his team and everybody. You guys, obviously, I saw you worked really hard with your product. You deserve what you got. And obviously, I understood, the shorters were screwing you guys a year ago or 2 years ago. And, every dog has his day. And right now, you guys are having your day. There is a real possibility that I wanted to show the investors out there of something that Tesla could do literally right now, and it would have massive impact on the stock price, further fueling this growth. And I'll show you what I had in mind. So right now, let's assume it's trading at the $900 range. Actually, it's trading less than that. It's pretty close to closing. I already closed at $887. So let's say $900. Let's just round it off, just to be even. And let's just say this fever continues. One of the things Tesla I did look at when I looked at their numbers is their debt. And the total debt that they have, and that's been a common complaint among a lot of people. Well, if Tesla starts making money, it's going to take forever for them to pay off the debt. And yeah, if you go on a basic business model, which is, take their cars that they sell and the profit from the cars that they sell, it'll take a long time to pay off that debt. I agree. But the stock price has gone up very high very quickly and gives them a very unique opportunity to sell shares literally now to pay off debt. And I believe they could pay this off fairly quickly at this point. So their debt is about $13.5 billion. Let's say 13.5 for argument's sake. The total shares outstanding are here. That's 180 million, but of that, 140 million is in the float. So that gives them about about 40 million shares to play with that they have, at their will that they could throw into the float. 40 million shares. That's a lot of money. How much is that? Well, here's what I looked up. So if the debt, this is in billions, $13.5 billion. And again, let's assume the stock price is $900. Let's just, for argument's sake, let's say that's the case. For them to liquidate, in other words, not liquidate, excuse me, to them to eliminate all their debt, they would have to take, of that 40 million shares that they have in outstanding, just basically sell 15 million shares. If they sell 15 million shares at $900 a share, they would have zero debt. Now, I want you to think about the impact of that. If they turn around, let's say 2 weeks from now, or even the next quarter, and say, hey, guess what, guys? Yeah, we did this, and we grew this much percent, or whatever, blah, 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 beat expectations, or didn't make expectations, doesn't matter, but we're debt-free. It's game over. The $900 price would be nothing. This thing would be at $2,000 or $3,000. They'd be debt-free going forward. How to sell 15 million shares is the issue. They could do it probably if the issue here is that, okay, well, could the market absorb 15 million shares? Well, here's your answer. Today's shares alone, 58 million shares were traded today. An average day for them, I think, is in the hundreds of thousands of shares. Let's just see here. Oh, no, sorry. Excuse me. An average day for them is in the millions of shares. So let's just take a look. Yeah. I mean, their average day is 10 to 20 million shares, 10 to 30 million shares, with recently being crazy. So they could literally sell, let's say, 3 million shares a day for the next 5 days. And that would be about every minute they'd be putting out a 5,000 share block, which is, it would not even be noticed by the market, really. That would be taken out. So in 5 days of trading, they could literally be debt-free. And again, just think about this hockey stick pattern that you see here. Think about the impact that would have. Because all the naysayers that have been talking against this company have been saying, well, it'll take forever to pay off the debt. That argument would be completely eliminated, all because of the fact that the stock price climbs so quickly. And it would obviously go up even higher. This would be peanuts. It'd be $2,000, $3,000 stock easily. I just want to throw it out there, let you guys, think about that. The shorts definitely would be sweating if that were the case. But that is a realistic option. If not pay off all the debt, a good portion of it can be paid off fairly quickly, fairly fast. Enjoy.